President Obama is fighting off attacks from his rival Mitt Romney for being soft on China, while at the same time China is trying to look tough in its handling of the anti-Japan protests ahead of their presidential transition. Joining me to discuss how the political pressures within each country could affect ties between the two is Steve Barrow from Standard Bank. Steve, if you look at the USA first, some analysts are now discussing inflation fears in the aftermath of QE3. Do you foresee this being a problem for the American economy?
No, I don't, because there's no real evidence that the liquidity or the cash that the Fed has been injecting into the economy is necessarily leading to much stronger growth. Perhaps unfortunately what's happening is most of that money is just staying in the financial markets, and it's pushing up the prices of financial assets like stocks and bonds. So there's a risk of asset price inflation, but not a risk of goods price inflation, because, as I mentioned, the economy in the US is still quite soft.
China is the second biggest trading partner of the US after Canada, yet this is Obama's third case against them this year. How damaging do you think these attacks could be for China-US relations in the long term?
I don't think they're problematic at the moment. The moves from the Obama administration are relatively small and directed at particular industries, the latest one being the car sector. And as long as things continue like that, I don't believe that relations will sour significantly. Having said that, of course, we have an election in the US in November, and the tone of Mitt Romney does sound to be more hawkish. But at the moment, my view is that Obama will probably win that election.
With this in mind, even as the US may complain about China, some analysts have said it is no choice but to continue trading with the country. Do you agree with this?
Well, it has a choice, as any country has a choice to stop trading with China. But the problem with that, of course, is that that would probably lead to much higher inflation. You've got to remember that China produces goods for prices significantly below where other countries could produce those goods, mainly because Chinese wages are very much lower than the West. And so if the US or anyone else were to stop trading with China or reduce trading significantly, they could develop an inflation problem, unless, of course, they were able to see that production switched to other low-wage areas of the world, like India, for instance, or perhaps other countries in Asia.
So, in your opinion, is it just political posturing in what's important election years for both parts?
Yes, it is. Well, it's an election year in the US, and we have the transition of the leadership in China. So those two things are quite important. I think the latest WTO case, World Trade Organization case, by the US against Chinese auto manufacturers or auto parts, that comes obviously just ahead of the election, and maybe is a sign that the Obama administration wants to show that it will be tough on China. So I think it largely is political posturing.
China is not without its own problems as the anti-Japan protests spread. Only last week there was a confirmation that the manufacturing industry, which accounts for 30 to 35% of the Chinese economy, was slowing. Do you agree with claims that this trade dispute helps China distract its people from the economic problems?
Well, I think there's probably little doubt that conditions on the ground in China, particularly amongst businesses, are probably weaker than the sort of headline economic data that we look at. The economy is still growing around 8% year on year from official data, but I think the businesses are actually suffering. But does that imply that a dose or an increase in sort of nationalism within China is desirable or necessary at this stage? No, I don't think so. I don't think the scale of unrest or weakness in the Chinese economy is sufficient for policymakers, for instance, to try to encourage that sort of direction. There's certainly more that policymakers in China can do to try and lift the economy. They have barely scratched the surface yet. Well, two arms of policy are primarily on the monetary policy side and on the budget or fiscal side. On the monetary policy side, the central bank has been cutting interest rates. It has tried to inject more liquidity into the economy, and it can go a lot further on those things. On budget policy, the government again has been helping to some extent, mainly bringing forward future large infrastructure projects. But I think if the economy were really sinking, it could do a lot more, and perhaps particularly at a time when, as you mentioned earlier, we're going through a political transition in China, and I think Chinese policymakers would want that to run as smoothly as possible, and therefore would spend more money if it were really needed.
And finally, what sort of impact do you think these disputes will have on the rest of the global markets?
Well, I think when we look in a global context, you have to say that many of the major economies or regions of the world are experiencing significant difficulty. Europe, the U.S, China we've spoken about. And many of those policymakers are trying hard to reignite growth in their economies. But those things don't seem to be working. Growth is still very low. Countries are also constrained in how much they can cut taxes or raise government spending because budget deficits are big. And in that context, you have to be watchful or maybe even fearful that countries will decide instead to almost steal growth from other countries. And one way to do that is through weakening the exchange rate, which perhaps is a policy that the U.S. has benignly accepted. And perhaps if that doesn't work, then to steal it through protectionism. And that maybe too is something that we have to watch out for going forward, because I think, as we're all aware, if the world descends into some kind of protectionism competition, as it were, then everyone suffers.
Steve, thank you very much for joining me today. Well, that's all I've got time for, but please stay tuned to Dukascopy for an interview with my colleague Rowena Harris-Doughty discussing the latest European news and developments. Bye for now.